been a year since we last presented at the Red Cloud presentation, and during that period, we have been able to make a new discovery, increase our resources by over 40% on the gold side, and well advanced on our way to issue an updated PEA. So lots of great things happening this year and for many, many more months to come. I will be making forward-looking statements. So the new resource that Ron just alluded to has been an increase of about 40% of gold in indicated. We are now up to almost 7 million ounces of gold in indicated and approximately 3.1 billion pounds of copper in the indicated category, approximately an additional 1.5 million ounces of gold in inferred, and about 0.6 billion pounds of copper in inferred. So this clearly is one of the reasons why we have outperformed our peers. We have great leverage to not only arguably the most critical metal in the planet, copper, but we have an abundance of what we call the critical currency in gold. We're also in British Columbia, giant porphyry country, which makes us one of the most attractive undeveloped copper and gold, copper porphyry in Canada that isn't currently owned by a major. So what we have are three propositions for our investors. The first is what our PEA will shortly define. That includes Red Dog, Hushmu, and now Northwest Expo, where we're advancing a billion-ton project to show a phased approach for about a 40-plus year mine life and an attractive return. The second lever to our story is our exploration side. We've made 2 discoveries, all within the same district of our project, only about 1 kilometer away from our defined project, which has enhanced potentially our economics and also giving us more and more opportunity to expand the project. And thirdly, the third lever is our long-term optionality in Pemberton Hills, which is only about 7 kilometers away and expands across about a 7-kilometer lithocap, trending around 5.5-kilometer alteration, which we believe is one of the larger potential discoveries that is available today. So in 2021, we released our initial PEA. This boasted about a $1.1 billion NPV after tax, 8%. It was about $1.4 billion CapEx. It was a 22-year life of mine. It was about 100,000 ounces of production a year, 100 million pounds of copper production a year for those 22 years. So clearly that was a reasonably high capital intensive project for something that cash flowed for many, many, many years. So we went back to the drawing board, understanding that capital intensity is an issue, especially for a junior mining company. And we made these 2 discoveries that I alluded to, one of which we defined into a resource and did additional the metallurgy on it. So now we're confident that now we have an area, a phased one potential area that has 2 to 3 times higher NSR value per ton rock, which obviously means much higher margin that allows us to reduce our capital intensity for the project. And then, of course, with the additional increase in the resources that we released last week, we're looking to expand the life of mine significantly. So that study should come out over the next quarter in Q1 of 2025. But I think fundamentally what's important to recognize, and which was described very clearly in the luncheon yesterday by Pierre Lassonde, we do not want to be stuck in the development side of the curve where it will take many, many years to get our permits and obviously advance the project into production. We would want to continually explore our 35-kilometer district region, which is quite expansive and have many levers as to where the focus should be. Should it be focused more on higher NSR value per ton rock? Should it be focused on more of the swing for the fences, buried porphyries, deep systems that a lot of the majors are looking for right now? Well, the beautiful thing about the story is we've got both, and our priorities are focused as such. So we have over 200 years rather of experience on our board and our management team finding, developing, building, and selling projects. And we are very well positioned to rinse, repeat, and advance. So again, we have outperformed our peers over the last 12 months. A lot of this has to do with the great balance of copper and gold, two critical metals, critical currencies, in addition to the fact that we have 2 discoveries, as I mentioned, and we're progressing our company with a very well-capitalized and clean balance sheet. We do not have any warrants outstanding. We do not intend to issue stock with warrants. We do very much protect our capital structure because our insiders and management teams own approximately 18% of the company, with 3 other individuals, Michael Gentile, Donald K. Johnson, owning approximately 20%. In addition to that, we are well advanced in developing our institutional breadth with Franklin Templeton joining our register in December and continuing to be very supportive. So this is just the backdrop of where we are. This is identified by the BC province as being the highest priority critical metal projects that they've identified. As you can see, there's not many that have that gold and copper exposure that we have, and there's certainly not many, if any, that are as advanced as we are from an infrastructure perspective and that aren't currently owned by a major. So we're on Vancouver Island. A lot of people associate the island with beautiful trees and habitat, which is absolutely true. That's the southern part of the island. If you look at Highway 4, north of Highway 4, you start to get into a more industrial, natural resource extractive industry area. And then north of Campbell River, all of this infrastructure, including roads, power, ports, town, was all pretty much built for the Big Island copper mine that was in production for 24 years by BHP. In fact, Port Hardy was approximately 300-person town up to the point of the development of that mine in the 70s, which then exploded it to about 3,000 people. So this is where we live. If you could look at the topography, this is second, third generation logging that's dominated the area. The BHP Island copper mine sits just on the southeastern edge of our property. It went for 24 years. It still obviously exists there. The port right over here is still there and certainly available for development. We're only about 25 kilometers away from that port. It's arguably the closest deep sea water port to Japan from continental America. Port Hardy, as I mentioned, was built for this mine, this project. We've got very strong support of the local municipality, the province, and now the feds, given that over $150 million has already been spent on the infrastructure surrounding this area for a project of our size. We do, in addition to that, we do have access to clean power. There's one of the largest BC wind farms that exists just to the north of our property. This produces about 100 megawatts of excess capacity that is currently being sold to California. Our project is defined, as I mentioned, the PEA will be defined by Hushamu, Red Dog, and Northwest Expo. There's been a significant amount of work done at Hushamu. This is our high tonnage project, cash flowing project, something that can go on for many, many decades. BHP Utah did a lot of work on this back in the 60s and 70s. There's a high grade zone in the valley that obviously impacts significantly the economics in the earlier years. But what we've tried to do is figure out a starter pit for this project, given that the NSR value per ton is approximately $22 per ton, which was reported in our resource estimate last week, and our costs are about $11.50. So it's about 50% margin. But Northwest Expo and Red Dog, which is situated just to the northwest of Hushamu, have an NSR value per ton of approximately $55 per ton and $35 per ton, respectively. So that means that's approximately 75% margin, and that is what's going to enable us to progress a phased approach, an Artemis Blackwater style approach, where you can reduce your capital intensity up front, but still achieve significant returns, effectively funding and bridging into the second phase, the bigger project in Hushamu. So what enables us to do that? Well, Red Dog is a very low strip ratio. It's approximately 0.2 to 1 strip, which is a breccia that's broken off from a porphyry nearby. And then Northwest Expo is the first discovery that we made about a year and a half, 2 years ago, that we've now defined into a resource that has a gold-enriched zone right at surface that enables us to effectively achieve that $55 per ton or 75% margin that we would be contemplating in the PEA. As you can see, there's a lot of exploration potential at Northwest Expo. This is where we hit the 135 meter hole at 2.1 grams per ton at surface. That was right here. And that's effectively the average grade of the open pits in the earlier years of the project, as you can see, as defined by the red zone there. So that's clearly a potential for exploration opportunity. We're currently drilling this out to try to find the causative intrusion of this area towards the southeast, stepping out to the southeast. And those results should come out over the next month and a half as we get them into the labs. And then in terms of Goodspeed, West Goodspeed, we made our second discovery at West Goodspeed in December. So we've been very actively drilling this project. As we can see here, it is going to be fault-bounded, but we've been receiving intercepts of approximately 0.5% copper equivalent over 135 to 200 meters. So we're eagerly drilling towards the southwest as we anticipate the direction of that trend going towards. And as you can see, that trend going towards the northwest, not southwest, I apologize. The northwest is effectively intersecting Red Dog potentially and Northwest Expo. That's a 7-kilometer trend, which is very interesting. But if we're able to convert that into a 7-kilometer strike, that would be absolutely world-class Tier 1. So that's what we're doing. We're progressing out from each center and radiating outwards to try to connect the dots. And then finally, in terms of that long-term optionality, is Pemberton Hills, which, as you can see, is only about 7 kilometers away. So this is the buried porphyry opportunity. This is the opportunity that, you know, all of the majors would be very clearly interested in, as defined by, it's defined by about a 7-kilometer lithocap, which you could see in the beige color there. We believe it is tilted towards the southwest. Which means that the alteration and the potassic zone would be towards the southeast. We've drilled it out. We've had proof of concept that indeed we are hitting that alteration. We're now looking for that discovery hole. So we're going to be progressing that potentially with a partner in the near future. So that's our project. I think the key question is, how are you going to permit a project in British Columbia, and is there any difference in permitting a project on Vancouver Island? Well, the answer is British Columbia clearly is becoming more focused on which projects they are going to prioritize. You can't be everything to everybody, and their focus is clearly going to be based on whether or not an area has First Nations support, has the sunk infrastructure that would allow the government not to be continually flowing money into building roads, power, and towns, and is it critical in nature, i.e. critical metals. So we absolutely check the boxes on all three. In fact, we are the gold standard in British Columbia around consent-driven decisions, which is evidenced by the fact that we got our multi-year access-based permits in 14 weeks. In British Columbia, for those that you don't know, it takes usually 12 months to 24 months to get these sorts of permits. In fact, it's starting to become the case in many other places in the world, including South America, Peru, Chile as well. We got ours in 14 weeks. So that is very direct evidence that we are doing the right thing in British Columbia. We are being prioritized in British Columbia for the work that we're doing around consent-driven decisions. So finally, there's a lot of good things that have happened this year, but the best is yet to come. We're obviously using all this information to culminate into the preliminary economic assessment, which should come out in Q1 of next year. In the meantime, we are going to be releasing 2 batches of results, at least 2 batches of results around our explorative and generative exploration activity at West Goodspeed and Northwest Expo. And then we're going to very quickly start our drill program for 2025 once we get a clear direction as to where the exploration generative activities are taking us. Thanks very much.